The housing market is shifting, and the numbers tell a story you need to hear. Delinquencies are on the rise, foreclosures are creeping back, and interest rates might be heading lower than we've seen in months, but that's not all. In this month's ICE Mortgage Monitor report, which accounts for 99.99% of the housing data, we're breaking down the latest data so you can see exactly where the market is headed. We'll also dig into what's really going on with loan performance, who's falling behind, which loan types are holding strong, and why some lenders are struggling to keep their own customers. We're going to also look at interest rate trends and what futures trading is telling us about the 30-year mortgage rates and where they could land in the next 6 months. Plus, we'll uncover why lending volume just hit its best quarter since 2022 and the hidden challenges that come with it. And finally, we're going to talk about home prices. Some markets are holding steady, others are slipping fast, and for millions of homeowners, that could mean big changes in your home equity, whether you're a buyer, seller, or investor. This update could change your next move. Hi guys, my name is David Piatek. I am a loan officer able to help you with your home purchase. If you guys would like to schedule a call with me down below, please do so, and happy to help. All right, so let me share the ICE Mortgage Monitor report with you guys now. I'm going to just show the first couple pages. Now, I've done this for the last couple of months, but this time around, I'm going to give you high-level overview. So this is just kind of the beginning and kind of give you guys what the overall trend is. And I know this may seem somewhat small, so I'm going to read through it. So delinquency rates. So that's the number one thing they're going to be talking about. The number of borrowers that are single payment past due increased by 71,000 people. So what that essentially means is that into last month, 71,000 people basically became 30 days delinquent on their mortgage. Now, it also notes here loans 90 days plus past due, but not in foreclosure have held steady. So it's like, 30, 60, 90-day lates. The second part is there's been an increase of 9.7% of foreclosure starts. So foreclosure starts were up 10% month over month and more than 36% year over year. That's pretty significant. Now, a little note they have with that, loans in active foreclosure increased 22,000 year over year, but remain below pre-pandemic levels. And you're going to note that's something that is talked about throughout this presentation. Now, what we've seen is prepayment activity decrease of 8.7%. What that means is people making extra payments towards their mortgage. So that has decreased year over year. So from the same time last year. Now I'm going to take this off this part. I'm going to share this report in the description down below so you guys are able to take a look at all this information yourself. And I will be sharing this with you guys on a month-over-month basis. So like we talked about, the national mortgage delinquency right now is 3.35%, so up 15 basis points, which means 0.15% from last month, driven by early stage delinquencies. Now, with FHA loans, they have the highest June delinquency rate since 2013. I want you to listen to that. FHA loans have the highest delinquency rate since 2013, excluding the pandemic. They may hit 1 in 8 loans that are delinquent by the end of this year that are FHA mortgages. That is pretty significant. And, there's a lot of fear mongering going around right now of, well, the doom is coming. And I'll tell you this, guys, is that the housing market can absorb a lot of these foreclosures. It doesn't mean that home values are going to be dropping. There's other factors that go into price adjustments for the market, and I'm going to cover that in a little bit. Now, when it comes to VA home loans, non-current rates are down year over year, but active VA foreclosures are up 61% from last year because of the hold the VA had on foreclosures. Now, if you guys don't know, earlier this year, the VASP program ended, and there was a new program that was signed into law just 2 weeks ago or so by the president, and basically helping veterans that are facing foreclosure. Now, remember, majority of the veterans that are facing foreclosure will be able to sell their homes and still make $100,000 on on their property and still, walk away with some money. So keep that in mind. If you know someone that's faced with that, there's some opportunities for that. Now, with the foreclosure activity, there's 208,000 active foreclosures nationwide. That's still 30% below 2019, but trending to a 4 straight month high. FHA and VA driving most of that increase. Now, let's talk about interest rate outlook and some of the lending trends that are currently happening. So currently, on average, the 30-year fixed rate was 6.61%, down from 6.75 in July. Now, when you look at the future market, futures outlook, we're seeing that that rate could hit 6.3% by June of 2026. That's the most favorable 6-month outlook forecast we've seen in the last 4 months, which creates an opportunity for people to refinance. Now, remember, VA loan rates and FHA loans are typically going to be lower than this market rate because this is accounting for conventional loans. Now, this is where the opportunity can come in. Now, there's about 2 million currently people with mortgages, right? 2 million that are in the money that could lower their interest rate by 0.75. Now, if rates drop to 6.125, 4.8 million people could be in the money to refinance. Now, lending volume in Q2, right, of this year was the best quarter since 2022, with cash out refinances making up about 60% of all refinances. It's relevant information because, people are refinancing for various reasons, doing interest rate reduction refinance loans, doing rate and term refinance loans. Right now may not make sense, but where people are finding it makes sense is to do cash out refinances to pull equity out of their property, which is something, I believe that's the average person pulls about $94,000 of equity out of their property. VA loans represent about 25% of those being rate and term refinances, which is pretty interesting because, you really have to be careful when it comes to these refinances because sometimes you'll get charged a lot of money to save not a lot. So I think it was like a little over $250 a month was the average savings from refinances. Now let's switch and talk about housing market and inventory. Purchase applications are up year over year for 26 consecutive weeks, ranging from 13 to 25% increase. Now, when it comes to inventory trends, we've seen a rise from 32% from May of 2024 to May of 2025, but now stalling. This is the first time we've seen a decline in 6 months in the month of June, right? So this is in July. So this is July's mortgage monitor report. There's also been big drops in home values in Denver, down 27%. We've also seen San Francisco and San Jose drop 20%. Seattle's seen a drop of 14%, and Austin has seen a drop of 9%. Now, there's potentially a repeat of 2023. Stalling inventory growth could trigger price rebounds in some markets. And just remember, when you see a price decrease, or when you see interest rates decrease as well, or they decrease rapidly, we also see home values rebound. So those are things to consider when you are thinking about purchasing a home now or in the future, because typically values go up over time. And it's better to understand your financial picture today and can you purchase a property today. Another piece with that is if you're waiting and all your friends are waiting and you all live in the same area for rates to drop, now that is your competition. Now let's look at home prices. Now, national annual growth for home prices was 1% plus 1% in July. That's the lowest since 2012. That's pretty big, excluding the early 2023 dip. Now, condos have seen a negative 1.8 year over year nationally. Cape Coral, that's a big one in Florida, has seen a negative 13.4%. So those are things to consider, and that's why it's really driven by your area. Now, from a regional differences, the Midwest and the Northeast, prices still climbing, and we've seen that. Chicago, I believe, was 5.4. We see Rochester at 7%, Scranton at 7.4. Florida, Texas, California have seen the largest decreases, with Austin being down 20.2%, Cape Coral totally down at 14.1%, and North Point being down at 12.2%. 70% of Western markets have seen lower year-over-year prices, which is pretty interesting on that point. But again, you guys could read through the report and see. Now let's talk about home equity. Now this is pretty substantial. So we have record highs. We have a total of borrowers having 17.8 trillion in total equity. 11.6 trillion is tappable equity, with on average people having $213,000. Now what that means is that, let's say you own a home, and that's basically what that gap is of how much equity you have, or you're actually able to tap in with a home equity line of credit or refinance your home. So those are positive things. So there's definitely a lot of equity that is out there. Now, again, we've seen sharp declines in Austin of 38%. Cape Coral, 34%. Those are pretty significant numbers. Now, let's talk about negative equity. So where people are upside down on their mortgage. And a good example of that would be, hey, my mortgage is $500,000, but my value is $450,000. That'd be an example. So about 1% of borrowers, that totals about 564,000 people, now are underwater, up from 0.6% last year. So now we're definitely seeing that. Now, the key takeaways for you guys to take away from this is, for buyers, inventory shifting could open negotiation opportunities, especially in cooling markets. And this is why it's important to understand where you are in that process. Now, for homeowners that are in the market, watch rates closely. If you're also own a property, there might be some refinance opportunities that might be coming up, and we'll definitely be doing videos around that. So if you're interested, you can reach out to me and I can help you. Now, when it comes to investors, regional disparities create both risk and opportunities. So you really need to understand where the housing market is for your specific area. And for the veterans that are out there, the VA loan remains a strong financing option, especially as rates move towards the lower 6%. We've also seen them a little bit lower, but in order to be able to see where those are, you got to just check online. We a lot of times use like Mortgage News Daily to kind of see where the trending information is. Hopefully you guys got some good info. Make sure you guys hit the like, subscribe, drop a comment down below. Let me know what you think about the information. Where do you think the market is going? And I'll catch you guys on the next video.